today's video, I want to chat to you guys about proposed draft changes to the tax legislation. And I'm really privileged today to have my friend Jashwin Baijoo joining me today from Tax Consulting South Africa. And I think he's really my go-to person when it comes to tax-related questions and just normal questions that normal tax consultants don't always have to answer for. So a while ago, I think maybe before we start with the actual interview itself, Jashwin, do you maybe just want to introduce yourself quickly to the people watching the video today?
Thanks, Heinrich. Yeah, so myself and Heinrich have many discussions on tax legislation, procedures, policies. And the reason for that is, aside from specializing in the tax sphere itself, I'm also a tax attorney, being an admitted attorney, as well as a professional tax specialist. So we've kind of got it covered on both sides of the coin.
Yeah. And I think before we start with the official questions or the list of questions that I want to discuss, I think maybe as a starting point, a lot of people watching today won't know what draft legislation is about. What is the reason for it? What is the procedure that it goes through when somebody gets an idea? And what is the steps that those things have to take before it actually becomes final legislation? Maybe do you just want to give us a little bit of a breakdown of how that process works?
Sure, Heinrich. So we have two aspects of legislation. We've got when legislation is proposed, which is what we currently have in draft format and out for public comment. And then once approved, it becomes promulgated. Now, procedurally speaking, what happens is deliberation takes place at a government level. And after deliberation has been concluded, there are specific items where there is agreement that changes should be made to the tax legislation. Now, because obviously we are a democracy, and to align with that, those specific changes before enacted into legislation are then prepared in draft format and released for public comment. One important point to note here is, as much as all of these changes are released for public comment, there are specific items where it does come across that specifications may be open for public comment. However, the overarching principle has more or less already been decided. And that's an example of that would be your beneficial ownership register. The reason I say that is because this functionality is already live on the CIPC eServices platform. The South African Revenue Service has aligned as well to include it now into the ITR 14 or company income tax returns. So in terms of actual commentary at this stage, it would just be specifics that may be changed based on commentary feedback.
Okay. I think as you were talking there already, you started answering my first question. And I think my first question that I want to ask is what are some of the amendments that's on the table at the moment? I think, is there anything that we need to be concerned about? Are there a few specific points that you think we should be aware of at this stage?
Yeah, so there's a number of amendments, but having reviewed the proposed amendments for all of the bills, including the monetary acts and the tax law bills, there are a few key items that we must look at. Now, before delving into, we rather look at them at a very high level. Some of them are fairly straightforward and others require a little bit more discussion. Now, first one to note is that the requirement for South African employers to register for and withhold your PAYE, your UIF, your SDL from employee remuneration is proposed to apply equally to any foreign employers. Now, what this means, should this new requirement actually be promulgated into law, is there will be an additional burden for foreign employers in the sense that they will need to implement payroll systems. Their registration for PAYE, UIF, SDL with the concomitant IRP5 will have to be prepared. There is potential to register a branch company in South Africa that may be a requirement, as they do have workers operating out of South Africa. The company itself will be required to have a SARS income tax number, and they must then ensure full compliance with the Companies and Intellectual Properties Commission. Right, now that is one. The second one is on the low interest foreign currency loans made by any connected persons to trusts, subject to donations tax, may have a methodology to calculate the rand value of the donation. Now, on this point, firstly, you look at connected persons. and that would be assigned meaning per the Income Tax Act. Thereafter, you would look at the actual foreign currency loan and the denomination to ZAR for any donations thereon. Going further than that, we have a positive, which is always great, and that's that the discretion will be afforded to the commissioner to extend the 40-day period for taxpayers to request a revised tax return where an auto assessment was issued by SARS. Now, the reason this has some favorable element to it is because taxpayers in the normal course do not sit on e-filing day in and day out to check for assessments, to check for returns, etc. And this would give them just a little bit of leeway to actually respond with a revised return rather than having to follow the dispute avenue. Another aspect to consider is the inclusion of the definition of beneficial owner in the Tax Administration Act, encompassing the meaning of the term in regard to a company, trust, and partnership being assigned its ordinary meaning. Now, from our perspective at least, one of the key, and the reason I say one of the key proposed changes is because the effect of this, or the practical ramification of this, will be felt by a broader taxpayer base, because it hinges on an aspect of beneficial ownership, yes, but also a reporting requirement and the automatic exchange of information between various organizations or statutory bodies within South Africa. As we know, SARS already has an automatic exchange of information with various other jurisdictions, but internally, this change is the interorganizational sharing of information be extended to now include organizations such as CIPC, the Directorate of Non-Profit Organizations, as well as the Master of the High Court. And this is very much included under the beneficial ownership proposed amendments.
Yes, I think at some stage I'm going to do a separate video on this beneficial ownership. It's a new term that's out there, and I think a lot of people don't know what it is. But I think it's one of those things that if you don't treat it right, it can become a big hurdle for you when it comes to your taxation type of things, and especially with companies. The whole thing that you were talking about, sharing data. If you look at how data is being shared between CIPC and the receiver of revenue, if those things don't match, you're going to run into problems with the receiver of revenue. But I think we'll do a separate video on that. I think it's really interesting. So obviously we spoke about a couple of big changes there, and the one thing that we were talking about is South Africa, or people that's employing people in South Africa. But what would that look like practically? The practical side of things, because there's a lot of big words, but how would they implement something like that? I think that's probably my second question there that I've got for you. So
with regards to this new requirement where foreign employers would have to register. Now, this is, it's a bit of a double-edged sword. The reason I say that is because if we look at these new proposed tax laws from National Treasury, they do serve to potentially throw a spanner in the works for remote workers in South Africa, limiting foreign companies' abilities to pay in foreign currency. Because if promulgated, your foreign employer must register for and withhold PAYE, SDL, and UIF.
Yes.
And they would need to put SARS for that purpose. Now, at face value, it may be minor, and yes, it would definitely benefit the economy because it helps SARS in casting their tax net as wide as possible. However, the reason I say it's a double-edged sword is because the further-reaching effects of this may lead to foreign employers prematurely terminating employment contracts and turning away South Africa as a skills location altogether. So South Africa, has always been kind of a hotspot, and that is because foreigners enjoy it. It's a low cost of living, and it's a great climate. Now, much the same can be said for remote workers. If you're earning in dollars and pounds, yet you're living in South Africa and your cost of living is in rands, and you also have the sun out most of the time, you've got beautiful beaches, mountains, and a great climate. You do have the best of both worlds. And especially off the back of COVID, South Africa has become somewhat of a hotspot for remote working. And this new regulation, if enacted and promulgated, will then add tax compliance hurdles to the sector. That could be quite problematic. The negative impact it'll have on the attractiveness of South African talent may also serve to increase our unemployment rate.
Yes, I think that's probably going to be some of the practical challenges that's going to be out there for them to implement these type of things. I think the idea sounds great until you have to start thinking about the practical side. So we're going to have to wait and see what they do there. Out of these amendments, these possible amendments that you mentioned, which one would you think, or which ones are the most beneficial for the average taxpayer out there?
So I would say most beneficial would be giving the Commissioner the discretion to extend that 40-day period for taxpayers requesting revised returns. Now, the reason I say that is, as I mentioned, the average taxpayer does not necessarily have professional assistance in handling their tax affairs. It's usually your individuals with complex tax affairs, your high net worth guys that always have that financial team around them to assist in navigating the complexities of tax, whether it's domestic or international. So your average taxpayer, they don't have this assistance, meaning they're not consistently on e-filing platform. They're not consistently checking their emails for any sort of SARS assessments. And granting of the discretion to the Commissioner is actually favorable to taxpayers because it allows them possible leniency in SARS treating assessments issued as final assessments where actually and factually incorrect. This means taxpayers would not have to enter into the formal dispute process to rectify any errors, but rather file a revised return. And in that regard, it's still advisable that you have a tax specialist, especially with where corrective measures need to be followed to ensure that correct due process is followed. However, the fact that that discretion may exist, if confirmed, would be beneficial to taxpayers either under their own steam or with the assistance of any practitioner.
Yeah, that's good. It definitely does make sense. I think maybe just the next question is, we spoke about a couple of proposed amendments that they want to do. And I think sometimes, if there's enough public participation, then certain things won't be enacted. But just out of the things that you mentioned now, which ones do you think they're going to go ahead, whether they're going to get public participation or not? Are there some of them that you think they're going to go ahead and do it in any case?
Yeah, so I think that the discretion to the Commissioner being obviously a favorable item, that even with public comment will probably be in favor of the proposed change. So that looks like it'll go ahead. There are certain aspects around the remote working and foreign employers having to register with SARS, where the public could really go either way. I mean, obviously, your remote worker is going to say, no, don't do it. But for the broader public, that's not going to have much bearing on them. And the appeal or the allure of having SARS cast a wider tax net on foreign employers may just result in some sort of, for you South African tax residents, that allure can be quite tempting. It is a possibility, but that again is from a standpoint of practicality. Now, if we look at specific changes where we feel they'll be enacted regardless of what the commentary is, dissenting or not, it would definitely be your beneficial ownership changes. And the reason being is the registers have been implemented. They're live on CIPC with SARS and the Master of the High Court for any trust declarations. So with this specific item at a high level, while still encompassing the basics, what this means is that any person who in relation to a company either ultimately owns that company or has the ability to exercise effective control over the company is considered to hold beneficial ownership in that company. Now, this includes, but again, not a closed list, individuals holding beneficial interest in the shares of the company. If you're able to exercise voting rights and directed changes within the company, whether directly or indirectly, if you hold the power to materially influence any sort of decision of the company in terms of management of a company, any other legal entity, body of persons, partnerships, other persons, or persons acting under the provisions of a trust agreement, whether you do it directly, whether you do it through a chain of command, you'd still qualify under having or holding beneficial ownership. So falling into any of these categories, whether direct or indirect, as we said, the deadline for declaration of beneficial ownership is literally around the corner. It's October. And that gives you effectively just over 2 months to get your ducks in a row for that.
That's good. Yeah. So I think just the challenges, I think we're going to have to sit and wait to see how this thing is going to play out, to see how they will enforce this thing. I think that's just in my opinion. I think some of the changes, my opinion, is really good. I think they make it for people that's not playing the game right more difficult, and I think for the people that's doing the things right, they're making it easier. So I think some of the amendments that they're doing is great. What is your take on it? Is there anything specific that you think that is really good, and something that you think that is a little bit dodgy, maybe?
So when we look at it from that perspective, we can't look at proposed amendments in isolation. We have to look more holistically. Now, if we cycle back a few months, there were procedural and more policy changes implemented at a SARS level already. So on one hand, yes, for the guys that want to do the right thing, they're making it easier, but are they in all aspects? I mean, you think about the increased stringency and requirements for VAT registration. That becomes a big problem. And the reason for that is the guys want to be compliant, they want to register, but they've got this increased burden to now discharge on the registration. It's the same with your approval for international transfer. They've done away with the foreign investment allowance, and now you've got to make these applications for a resident for anything over R1 million, for a non-resident for each and every cent moved out the country. So that's on the one side. They're making, I would say they're following their strategic intents in the sense that they're making non-compliance hard and costly, because these approval applications, at the very least, can become quite complex, quite in-depth. We have done one where we've had to cycle back 15 years. So finding the documents for that becomes the biggest hassle. But at the same time, there are certain things like the beneficial ownership item. If implemented correctly, it's more a case of SARS doing their due diligence than trying to be difficult with taxpayers. It's literally cross-checking. This is what the company declares as their shareholders. This is what the individual shareholders declare. This is what's recorded on the CIPC platform. So that inter-organizational interaction will help in the eradication of non-compliance. And that is why when you're in that position, it really is a case of making sure you dot your I's, cross your T's, and make sure you keep all your documentary evidence on hand.
And I think that's also one of the big reasons why it's really important to have the right people on your side. So I think a lot of people that's busy watching this at the moment, I think if you guys are sitting on the sideline, whether you were indecisive, whether you should get somebody, a tax consultant, a specialist, or somebody involved to at least just review your tax position, I think this is just one of the small little nudges in the right direction to make sure that you touch base with the guys at Tax Consulting in South Africa, or even get hold of me. If I can't deal with everything, obviously we will send you guys over to Jashwin and then to assist you guys. So I think all in all is good. Jashwin, I really want to thank you for your time today. It's always a pleasure speaking to you. And I think, for all the guys out there, if they maybe want to get hold of you, how can they contact you?
Yeah, so they can pop me an email. My email address is jashwin, so just my first name, at taxconsulting.co.za.
Yeah, perfect. Thank you, Jashwin. Thanks for your time. Thanks for all the viewers. We'll keep an eye out for the next video.